Yeah, so the last time we spoke, I was predicting that rates would stay relatively low throughout the summer. So I feel like one of those basketball announcers that talks about the guy that shoots 95% from the free throw line, and sure enough, he bricks both. And so as soon as I made those predictions, rates went on a spike. And so I want to clarify really what I meant by that. And I'm not really trying to cover it. But when I say rates would stay relatively low throughout the summer, I didn't expect them to stay exactly where they were. Of course, I obviously wasn't expecting a 1.25 rate jump in a very short period of time. But if you look at it in perspective, we're still at really very, very low rates. They went on an average 30-year term of like 3.35 to 4.5. 4.5 is still pretty low. And I do expect it to stay in that range of that, 3.75 to 4.75 through the end of the summer, to be more specific. So what happens is when you get a spike that happens that fast, bars just stop. We were hot, everything was hot, refinances were hot, purchases were hot, multiple contracts, people wanted to get in at those low levels. So you see the spike, and the typical borrower mentality is, well, it'll come back down, right? And then when it doesn't, as we're seeing right now, where it's kind of settling in, then people come back to the table and they go, well, I better get in now before they make the next jump, because it clearly looks like they're probably not going to go back to that record low number, which I would agree with. So we're starting to see activity pick back up again, where it was really slow for a lot of banks and a lot of mortgage companies. Particularly our loan originators have probably been struggling over the last month and a half. I mean, certainly what ends up happening is, if you've done your calculations at 3.5% and you're buying a $500,000 home, your payment could jump a couple $100, maybe $200, $300, $400, depending on the type, the size of the loan that you're taking out. So you can end up getting less house. So that does have an effect for sure. But again, at 4.5, we're still really, really low. But it's all relative. So what you were getting at 3.5 and what your payment was going to be and what it's going to be at 4.5, it can be significant if you're buying a $500,000, $1 million, $1.5 million home. It can be real significant. Sometimes we wake up and we're not in the greatest mood. And what you project out there in the world has a much larger ripple effect than you may be aware of. So if you're going to that coffee counter and you're not smiling, and either that or you're really actually even angry and you take it out on the person behind the counter or the person on the road that you flip the bird to, it could settle in with them, and then they take it out to the next person and the next person, vice versa. If you're the one issuing the smile and being gracious and being patient, that translates and can ripple out into the world. So be careful what you project out there, because your energy is contagious, and that's from good or bad.